Hello. Today I'm going to talk exclusively about the analyzer. I have noticed that there has been a lot of misconceptions about what it is capable of doing, and I want to clear them up and show and demonstrate the proper way to use it. Now, I've just picked a very simple process. I'm using MACD MADCA version 5 as this example. Here it says it's going to make $16.72 on the 5-minute candlestick. What that really is telling you is it's going to take 17 days to make this amount of profit. How did I get that 17 days? Very simple. There are 24 hours in a day, 60 minutes per hour. That means there are 288 candles per a single day. The analyzer always pulls in 5,000 candles. 5,000 divided by 288 is roughly 17.3 days. So for 17 days, it's going to make $16.72. If you go to the 1-minute chart, same thing, 24 hours in a day, 60 minutes per hour. That gives you 1,440 minutes per day. 5,000 candles divided by 1,440 is roughly 4.5 days. So every 4.5 days, this combination will make $8.94, or what I will roughly say, just $8. And I'll explain that in a minute. So there are 30 days in a month. This is every 5 days. So there's 6 complete cycles. So 8 times 6, $48 a month, roughly. So the 1 minute is more profitable than the 5-minute, because 17 days versus 4.5 days, or rounding up to 5 days. You must be aware of how to use the analyzer to determine a rough approximation. Now let's go into the analyzer. Let's go to properties. I chose USD as my base currency, and it must be the same in both places, or you will not get accurate results. For example, if you leave this as contracts, when it updates, you will see a very big lie. Both currencies must be identical. This is not correct. This is a lie. If you believe this, then you are going to lose money. Make sure both currencies match. And this applies for USD, for fiat, for USDT, and USDC. If you want to convert to euro, make sure your amount is appropriately listed in your basis. And it sometimes takes a few minutes to update that combination. There we go, it's updated. You must make sure that your appropriate numbers are based properly. Do not try to mix any of these combinations. It doesn't work well. Second, your commission. I use Binance America, so my maker and taker fees are the same. But if you use an exchange that has a maker fee of 0.1% and a taker fee of 0.4%, then you'll want to take the average of 0.25%. That is important. Take the time to set this up properly. And even then, this is not a magic ball. It's not a forecast of the future. It's not a fortune teller. It is an analysis of the last 4.5 days based upon this time frame. If you use the 1 hour time frame, then it will be an analysis of the last 208 days. So for the last 208 days, it made $32. Think about that. 200 days. You need to make sure your base order is appropriate for your time frame. That's why you see me using mostly the 1 minute or the 5 minute, because that is where my base order is appropriate for the time frame. Do not make these mistakes when you're trying to figure out your risks. Take the time to get your numbers right. The other thing is, make sure you understand, if you're using dollar cost averaging, don't count your shorts. Disable them unless you are explicitly dollar cost averaging on a short position, and then you would disable the longs. Take your time and make sure you set this up properly. Now let's take another look at this system. Let's go to a generic workspace. And of course, if you can't find what you're looking for, you can always search for it. So here's my generic workspace. I'm using only the savings account. For the 5 minute period, 17.3 days, it is telling me I could make $68. Verify the properties and you'll see everything is correct. Nice, simple, direct. A very rough approximation that I can then begin to take to the next step, which would be a paper analysis or a paper bot. Do not instantly go to trading real money based upon these results. You will lose money doing that. There is absolutely no shortcut to proper testing and analysis, ever. Even if this came back with 100% success rate, always test thoroughly. This is only an analysis of the last 17 days. There is no guarantee what is going to happen over the next 17 days. Statistically, you can say that this is the potential of a rough average, but that is not guaranteed. We could have another Black Thursday crash. You could have another rally that skyrockets everything. Realistically, this is a tool, not a fortune teller, not a magic maker, not a wishing machine. Take the time to learn and understand exactly how it works, because it is an indispensable tool when used properly. For now, let's shrink it. Let's clear the chart. Now we have Cardano by itself. Complete lookout. Let's go to Bitcoin. Why? Because that is the most volatile of all coins. And as you can see, this shows the rough estimate of the most recent rally. So let's take and actually plug something in. I'm going to use the new parabolic stop and reverse module. It's an insane module that will demonstrate exactly what I'm talking about. As always, turn on the chart, turn off the signal line. Pretty straightforward, pretty simple. And as you can see, it does a mess of trades. Now let's add the analyzer. And let's see what this mess is going to produce. Although I can tell you by looking at it, it will be a mess and not necessarily profitable. So we're going to go in, go to Inputs, choose the signal line, go to Properties. Take the time to set this up. There are no shortcuts in good and proper trading. Do not ever take shortcuts, because not taking the shortcuts can cost you a lot of money. And as you can see here, parabolic stop and reverse, or parabolic SAR by itself, is a miserable failure. Now let's go back over here and let's turn off shorting. Let's just look at the long aspect. And it's still a failure. Parabolic SAR works great in trends, but if you don't have a trend, it is a hot mess waiting to roast you. It's a good, valuable algorithm for the right circumstances. Let's make the right circumstances. I'm going to load up the dollar cost averaging module. I'm going to connect it to the parabolic SAR. I'm going to put it in strategy mode. Strategy mode means both of these settings have to say strategy. That way the strategy alone drives the entire process. This just ensures it makes above the profit line that it should be. So we're going to set this. Now let's take the analyzer and let's set the analyzer $2 cost averaging. So now for 17 days, it is going to produce $8. For Bitcoin, that is a reasonable profit for an $11 position. Keep your trading in context. I am only using $11 positions. So that is an important factor you need to be aware of. As you can see, 1, 2, 3, sell. 1, 2, sell. So as you can see, very easy, very simple way to look at your chart. For $11 positions, having an $8 profit after 17 days is quite generous. Let's look at what it would be after 4.5 days. So for 4.5 days, I'm making almost $4. Now let's round that up to 5 for easy math. So, and I'm going to round this down to $3. So that means there are 6 cycles. I could make $18 using the 1-minute chart for a 30-day period, or roughly $10 to $12 using the 5-minute chart for a 17-day period to 30-day period. Extrapolation. Again, working with averages and only averages. There are no absolutes in this kind of system because you cannot predict what Bitcoin is going to do over the next 17 days, 30 days, or even 1 day. The market is too volatile. If it was that predictable, everybody would be millionaires. It's not. Instead, there are 1,001 ways to lose your money. And there is only one way not to lose your money. That is the important factor of why this analysis is critical. Even though it says 100% success rate, realistically speaking, you need to be aware that the market is not a guarantee. It will fluctuate. And you can even go so far as to watching this change in real time. For example, I put this on the 1-second chart. And that means now that this has roughly a little less than 2-hour threshold. So every 2 hours, I have the potential of roughly 44 cents using this particular recipe. And it's only going to make 3 trades every 2 hours. As you can see, it'll work real time, and you can actually see whether or not it fluctuates. Take the time to analyze every single detail. Now let's take a look at a process of actually determining a working methodology in real time and getting it set up and tuned appropriate to a reasonable profit. Let's start with a very common leading indicator that does respectably well. But before I do that, the first thing I'm going to do is bring up the analyzer. I'm going to shrink this down, and I'm going to turn off shorting. I'm only interested in long positions. I'm also going to go through the process of setting up my base currency. Remember, USD, USDT, and USDC all should be set to this. Make sure both of these match. If they don't, your numbers will not be accurate. Make sure you put the proper amount in for your commission. Okay, set it up. There it is. Now, let's start with a very popular process. Let's start with MACD. And for now, I'm going to hide this. Let's start with displaying the chart and turning off the signal line. Very basic, very simple. I'm not even going to make any changes to MACD at all. No changes. So now let's bring up the strategy tester. Let's hook it up to MACD. So MACD by itself will produce the following results. By itself, under the current market with the last 5,000 candles, or 17 days, MACD by itself would have a 63% success rate, and you would earn $4. Simple, easy, well done. Now let's hide this again. Now let's take another combination. Let's add parabolic stop and reverse. It's a powerful combination with MACD that can do very well. Let's see how well it works. Let's start with the same thing. Disable the signal line. We do want the indicator on indicator process, and we want the MACD signal line to be pulled into it. And so now parabolic stop and reverse will reevaluate everything. And we missed something, double check. We forgot to turn the chart on. Okay, and there we are. I can actually move this to the main chart, but it lines up the way I want it to. Minor bug here. It doesn't plot the closing price. But again, take a look at this. It's not saving that either. Take a look and you'll notice no changes. None. Default settings only. Alright, there we are. So we have a couple of sell signals. Now, let's bring up the strategy designer, or analyzer, excuse me, and let's attach it to the parabolic SAR. Now, I just went through the entire process of building a complete strategy in real time, analyzing each component. And for 17 days, BTC is going to give a $3 profit. For 4.5 days, BTC is almost going to give a $5 profit. So, you're looking at almost $15 for 15 days on the 1 minute candlestick. Not bad. 100% it says you can look at the actual summary, verify the numbers, make sure you don't see anything, pay attention to the details. This is important. If you don't necessarily have the budget, this could be a problem. But this could also be a lie. This is why the paper trader is the most important step following the analysis. The paper trader will give you a better estimate of your budget in real time. Do not believe all numbers right away. And that can be proven by the chart itself when you look at it. For example, I have each buy signal at $11. So notice between that buy signal, no other sell signal. But we have a sell signal. Let's see how many buy signals it actually produced. So there's one buy signal, 11, 22, so $22, $33, $33 is all I used to produce that buy signal. That was it. So where did it get that I would need a $22,000 budget? Be aware that these numbers are not perfect. They are not absolute, and the analysis is not the end-all and be-all to your final stage before you apply real money. Now that brings up the question, how long do you run the paper trader for? Very simple. This is a 4.5 day to 5 day cycle. Therefore, if these values are correct, you should be able to run a paper trader for 4.5 to 5 days and get similar results. If you're on a 5-minute chart, this will be a 17.3 day cycle. Realistically, you will need to run your paper trader for 17.3 days and compare the results. You should be within a reasonably close approximation based upon real market data between what this says after 17 days and what your paper bot says after 17 days. So, however long your trading is, make sure you run your paper bot for the same cycle for comparative analytical results. Don't take shortcuts. If you see this is working great after 4 days, don't think that the other 13 days are going to be a perfect match. Run the test to completion. Be thorough. Keep accurate notes. Keep your trader's journal up to date. I cannot emphasize this enough. If you take shortcuts, you are going to lose your money. If you don't follow proper trading procedures and carefully analyze each and every aspect of your trading, you are going to lose money. It's that simple. Make sure you are thorough at each and every step. The most important step does not take place here. It takes place here. The most important step of the entire process takes place by researching each and every coin. The coin choices you make are going to be the choices that could decide whether or not you keep your portfolio. And you need to be sure you're willing to write it down and risk losing everything. Each coin has the potential of making you money or wiping you out. Just because somebody says a coin is a good choice for them, or you download a template that has a wide list of coins to trade, that doesn't mean you are going to do well with that coin. You need to look at coins for trading volume and market cap. If this is not very good, or this is not very good, you are going to lose money, no matter what strategy, algorithm, or recipe you use. Both of these must be very high. This number determines the stability of the coin. High market capital means a lot of people have a lot of money invested. It is likely to turn around very quickly from any market tragedies. This number tells you that a lot of people trade it on a consistent basis. That means that you can be guaranteed with a reasonable level of certainty to have a seller when you are ready to sell what you are holding. But if you start climbing down here, if you have this coin, don't expect to have a seller waiting when you are ready to sell. Also, don't expect to be able to buy when you are ready to buy. You must have the volume to buy and sell. That is, you must have somebody on the market wanting to either buy what you have or sell what they have. If you don't have it, you're not going anywhere, and you could be stuck in a situation you can't get rid of. This is the most important part. Don't shortchange it. Do your research. Make sure you understand every single detail. If you choose a coin that is not necessarily a strong point, let's pick something here. Let's just pick this coin. So, for some reason, whatever it is, if you like this coin and you believe in its value and you're willing to risk your entire portfolio for it, then you will understand the risks you take. As you can see, it's not very strong. You are not necessarily going to be getting a buyer when you want to sell and you're not necessarily going to find a buyer or a seller when you want to buy. Make sure you are aware of that when you go into your coin choices. You must understand all of your risks. You must understand each and every coin you trade in. Don't blindly accept a coin on face value. Go through, look at its website, study it, learn it, understand it. Take the time to educate yourself on exactly what you are investing in. It doesn't matter if it's cryptocurrency, Forex, or the stock market. Blindly buying in to any asset of any kind is a fool's choice, and it will cost you money in the long run. Understand your risks. Understand why you want to purchase this particular asset. Understand how this asset could grow in the future and what happens if it collapses in the future. Don't shortchange your analysis. Use the analysis tool to help you make the right choices once you have picked your coin. And make sure you take the time to absolutely, unequivocally understand what you are trading. Understand the benefits of your trade, and understand a true and proper assessment of your analysis for the time frame. For example, for this coin on this particular recipe, it is only going to make 59 cents for 17 days. This is not necessarily something I personally would choose to trade on. I would look for a better recipe. But depending upon your budget, your risk assessment, and how much you are willing to actually trade, this could be something that you might want. For example, if you are looking to use, well, first let's set it at $11. So 17 days will give $6.80. Let's set it at a $100 position. So every position will be worth $100. You will make $61 in 17 days. Now, you can count the particular orders. For example, 100, 200, sell point. 100, 200, sell point. Remember, each position represented by a triangle will be $100. Be prepared to understand your budget. Understand the management of your budget. Understand the costs of your budget. All of these are factors as part of your risk assessment. If you have a very limited budget, then this is not an ideal situation. If you have a rather generous budget, then one coin could very easily reach your break-even point. Or it could very easily wipe out your entire portfolio. Understand that, and don't make any delusions that the market won't clean you out. This particular situation, $300. Plan for the worst case. Expect the worst case. Prepare for the worst case. Always. Use the analyzer judiciously. Analyze each and every aspect, piece by piece. Tune, tweak, and take your time. Use CoinMarketCap and other resources. Pick the best coins for your situation. Don't blindly follow the leader. Black Thursday is a very strong lesson in what happens when people don't pay attention. People panicked and sold for the most stupidest reasons possible, and it decimated the market. The people that know what they were doing were ruined because of idiots not taking the time to do their diligent research. Being an investor in the market means being responsible for your finances. Don't be an idiot and shortchange the market. Don't be an idiot and not do your research. There is no substitute for proper planning. Until next time.